Hey guys, it's Krishna, and I'm here to deliver your July market report. Um, so, we want to talk about what's going on generally in the market and then what's happening locally in the market. I'll go ahead and start locally and move on to the national level and hopefully find some hope for everybody here that's looking to buy. Um, so, in June, year over year, we're looking at Bexar County with 6 weeks worth of inventory. Okay, San Antonio is reporting in at 6 weeks worth of inventory. Converse at 5 weeks. Live Oak 2 weeks. Schertz 5 weeks. Cibolo 4 weeks, and Universal City at 5 weeks. So that's for through June of this year. Okay, and that means it would take that many weeks to sell all the homes if nothing else was listed. So we've been around. In San Antonio, has been around 6 weeks for quite a while now, and I'm not seeing any indicators that that's going to get much worse. But I'm not seeing any indicators that it's going to get a whole lot better in the short term. But one thing that does stick out, and I'll give you some news here from a couple different sources. Number one, Zelman's June broker report. This is a data company, and basically, and I quote here, this month's overall home buyer demand rating equaled 86 on a 0 to 100 scale, and that's down from 88 last month and marking the first sequential decline since November. So what does that mean? That just means that the demand just came down a little bit. That's good news. If you're in the market and you have to buy, you saw a little bit of the demand tick down, and that's on a national scale. It's not necessarily local here in San Antonio, but those kind of things, those trends tend to spread, and usually we're kind of last to feel it. So it's something that could be coming this way. Here we have from the Home Purchase Price Sentiment Index that Fannie Mae puts out, and here again, was looking at a trend here. Respondents were asked, is this a good time for you to buy? And last year in June, 61% of respondents said yes. By December, it was 52%. And then April of this year, it was down to 47%. May of this year is down to 35%. So that's quite a big attitude change. People that are in the market hunting or thinking about being in the market said it is not they said those people said it's a good time to buy. So only 35% of the people said it was a good time to buy. So the attitude is definitely changing. But let's look at some realities that is driving that attitude, or as we might want to say, buyer fatigue. And I can tell you right now, the fatigue is real. I hear about it when I have a listing, from other agents trying to get their buyers under contract. And say, hey, yeah, we've put in a lot of offers, and they're just so tired. And here it is. So the fatigue is, record price appreciation. The buyers are seeing that, so they're panicking. And they're really trying to get into the home. Extremely low inventory, record high percent sales over list price. So it's in some respects it's a guessing game on how much you have to offer on a home. There is data out there to help you with that, and you should be looking at that, but it's at a record high. So sometimes it's 10,000, sometimes it's 20,000 over list price, depending on your price range. Record low days on market. So they don't just sit there for 3-4 weeks for you to make a bid. A lot of them are gone in a day or two at the most, and you don't even have time to get off work to go look at it. So that is setting buyers up for a lot of fatigue. Historically low mortgage rates. Now this point here is this is really driving people to want to buy, because they know that the rates are really low still. You know, regardless of whether they say it's a good or bad time to buy, the low rates are enticing people into the market because it's making it cheaper than the rent in a lot of cases. So obviously, we can get to a point where that might not be the case, but we're just not there yet. People still have that desire. It is coming. It is tampering down a little bit, but the low mortgage rates that are here right now are encouraging people to want to buy. So now this is going to ratchet down a little bit, and I can share that with you as well. Let's see here. Okay, here we have mortgage rate projections. Freddie Mac, Fannie Mae, Mortgage Bankers Association, National Association of Realtors. These are all their educated guesses at what the mortgage rates are going to look like the third quarter of 2021, which we're in right now. Looking at the average of 3.175. They're looking at the fourth quarter at 3.37% interest rate, and the 2022 first quarter looking at a 3.47% interest rate and a 3.57% interest rate in the second quarter of 2022. So definitely, if you're a buyer and you're hunting and you're thinking about taking a break, you want to put this into the equation. What is it going to do to your payment with these rates? What is it going to look like as far as a price projection? And that can be done as well. So looking back year over year, you want to look at what the pricing is going to look like later, and I can give you a guesstimate here with a forecast. You can add this in. Zelman and Mortgage Bankers Association, National Association of Realtors, Fannie Mae, and Freddie Mac all have their estimates here. Zelman is at 10.6% appreciation for 2021. Mortgage Bankers Association is at 10.3%. National Association of Realtors is at 9.2%. Fannie Mae is at 8%, and Freddie Mac is at 6.6%, for an average of 8.9% on average for the forecast of appreciation through this year. So this is really through the end of the year here. We're more than halfway through it, and so that's a pretty big price increase. If you started at the beginning of the year and you're still hunting, or if you just started, you still have some percentage points to go, based on this. So just take all that in consideration with your house hunting, and just know that we're not really projected to see a really strong buyer's market anytime soon. It looks like we're going to be in a seller's market for a while. We don't know what the catalyst might be to send us into the buyer's market, but we're a long way from that. So stick with it. Just know that if you are in the market, that your competitors are getting tired. Okay, so if you are bound and determined to do it, just keep it up, because people are getting tired. Things are going to happen. Folks are going to make different decisions. They might decide they're going to continue to rent, or they're going to move to a different area where maybe there's not that much competition. So keep it up. Not everyone, but majority of buyers tend to want to look during the summer, which is okay. But some of them will kind of shelf that project until the next year. But if you can find a way to continue to stay vigilant in the fall and the winter, even though inventory typically kind of goes down at those times, I think that you might find that there will be some new inventory coming up, because people are putting their homes on the market a little bit later than they usually have. They're kind of waking up out of the COVID lockdown and deciding, okay, we can actually sell now. We can have people come to the home and check it out. So people are putting their homes on the market a little bit later. So be ready for that. Maybe it might be a surprise to find a couple of listings where you weren't expecting to see them, even later this fall. So, be ready. So the market has shown a little bit of signs that it can change and that there is some potential. I'm not saying that's going to be a huge tidal wave or anything, but be ready and stay strong. So hope that helps you. And if you have any questions, let me know. Put it in the comments, and I'll see you guys in the next video.